Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
In today's mortgage environment, providing our wholesale community with the best combination of product, pricing, technology, and service is paramount to their success. PRMG, built by originators for originators.
Welcome to another edition of Master of the Markets. I'm Barry Habib, and MBS Highway is created exclusively for Mortgage News Network, and it's brought to you by our friends at PRMG who are working for your best interest. So last week we got the big jobs number. We also saw a 10-year note auction. And I'll tell you what was very interesting was that the jobs number was a little beneath expectations, and revisions to previous months were also a little bit softer. But you know what? The weekly earnings number, and this is an important one because this is different than hourly earnings, because that's how much you make per hour could vary, but if you work less hours or more hours, you could actually be having more money in your hand. Weekly earnings measures that. It's not something that a lot of people look at, but we think it's very important. And weekly earnings actually increased on a year-over-year basis by 2.3%, but that's a big difference. It had been near 3%. The reading from last month was 3.1, dropping to 2.3%. So this is a bit of concerning number here. Now the unemployment rate stayed the same at 3.5%, so the market was kind of calm and settled through it. But I want to keep a watch on this weekly earnings number to see if this means that there is some concern ahead that maybe things might not be as good as thought, if people are making less of an increase on a year-over-year basis. Maybe the labor market isn't showing as much strength as you would think with a 3.5% rate of unemployment. And as I mentioned, we got a 10-year note auction as well. And that 10-year note auction was actually disappointing. We did not get the participation that we thought, especially since these levels are a little bit higher. You know, with the 10-year Treasury in that mid 180 range, you'd think you'd be getting some more participation. But we're not. We're just not getting the foreign buyers to participate in coming. In fact, foreigners have been net sellers, which means if we've got more debt, which we do, huge amounts of debt, we finance that by issuing treasuries. And if foreigners aren't going to buy it, well, then we have to buy it internally. And if we're not buying enough, guess who does? The Fed. Now, the thing of it is that the Fed has been buying with both fists. It has been absolutely incredible how much the Fed has been purchasing. Take a look at this. This is the Fed's balance sheet, as you can see here, when they began this sometime in mid-September to start purchasing mortgage-backed securities. I'm sorry, not mortgage-backed securities, but treasuries. I meant to say that they're not buying mortgage-backed securities, they're buying just treasuries and just bills. A bill means a maturity of a year or less, so very short term, but they've been buying like $100 billion a month, and as that white line has been going up, I want you to notice the S&P 500. So this is the stock market. So once the Fed started buying here, you can see the stock market was at this level. Stock market was still kind of declining a bit, but thanks to this, look at the correlation. This correlation is pretty incredible of how influential the Fed buying is on the performance of the stock market. Very rarely do you see such an incredibly close correlation between the two. And because of this, I want to mention something that happened last week, was the Dallas Fed president. He had said that he is now concerned with the amount of quantitative easing, or the amount of increase in the Fed's balance sheet, and thinks that at some point in time this has to stop. Now, he's a voting member, and if this does spread to other members of the Fed, then does the Fed at some point stop with this $100 billion a month of additions to its balance sheet? And if they do, then what happens to the stock market? Does the stock market take a big move lower from these highly elevated levels? And listen, make no bones about it, there's so much optimism. You just can watch any business channel. Everybody that gets paraded on there is waving the flag on how great the stock market is. Now it's going to reach even higher and higher levels. Now, does that happen? Maybe. But it's been my experience that when everyone's on the same side of the trade, usually the opposite happens. And it seems to me that right now everybody's on the same side of the trade. We'll see. We'll see what happens. It will be interesting. Now, in the week ahead, we're going to get some inflation data, always important and can affect rates. And we're also going to be getting some data with regards to the housing market. the housing market has been good. I think it's going to stay good. You know, I've been one of the lone voices out there for a long period of time saying this. So many naysayers out there, some of them now saying, hey, housing does start to appear pretty good. Well, they've missed the last several years of it, but we think that this will continue just based upon what we're seeing as far as demographics go and as far as the lack of inventory. Housing really appears to be very strong for us. I think you'll see that reflected in some of the data you get next week. Now, with respect to what to look out for, we're in the middle of a pretty big trading range. So I think that we have to be on guard for some swift declines in the market this week. Let's see what happens with respect to the inflation numbers. But if we get tame inflation, we should be able to get through the week okay. Hopefully we'll have a good week ahead, and hopefully you'll join us on MBS Highway if you haven't done so already. Have a great one. Bye-bye.
PRMG continues to provide our wholesale partners across the nation with better technology, better product, better pricing, and better service. Our nationally recognized brand is more than just an image. It is a symbol of integrity. PRMG, built by originators for originators. Be sure to click on the link below for your free 30-day MBS Highway trial.
This is Mortgage News Network.